Hi, Santa Barbara. It's Daniel Zia here. I'm the founder and CEO of Zia Group with eXp Realty on the Central Coast. I'm going to be bringing you this month's real estate market update. We're here in July, but this is reflective of the statistics in June, but also what's going on today in our South Santa Barbara County real estate market, including the luxury areas of Hope Ranch and Montecito. So first, let's start with the conclusion. You might be wondering what's going on with the real estate market. Well, if you wanted to sell in the historically best sellers market of all time, I know I've been telling you this the last few months that window might be closing. And I think at this point, it's safe to say that window of the best sellers market in modern day real estate history has officially closed. So our real estate market today is very different than the real estate market of 3, 4, 5, 6 months ago. And I'm going to dive into what's making it different and what's the pulse and the feel of the market is. Now, what's interesting is while I'm going to go over what some of the statistics are, there's actually a pulse or flavor to the market that many agents, frankly, don't feel to the same extent of Zia Group. In case in point, last month in June, even though there's 1,800 real estate agents in town, Zia Group, we actually sold 11.5% of the sales in June. So we have our hands on so many different transactions, a variety of price points to the ultra luxury, down to the affordable price ranges. We're able to feel some of these subtle shifts in the market that are happening, even as they're happening day over day, week over week, where a lot of agents are just looking at the real estate statistics in the past months and trying to draw retroactive conclusions. So I'm going to give you some of the on-the-ground pulse of the market here today. So let's start with home prices. You might be wondering, are home prices going up or down? And the simple answer to that is we are not sure. It's very hard to determine that. Let's look at 2005, 2006, 2007, when the last peak of the market was happening. We didn't know at any given moment whether home prices going up or down. We were kind of at that top end of the peak. And what we started to see some properties come on the market and sit on the market a little longer. We saw some properties come on the market and sell for what seemed to be less than it did 3, 4, 5, 6 months ago if they were listed in previous. Or we actually saw some examples of properties come on the market that had sold maybe 6 months, a year and a half before, and suddenly we had some examples of those selling less than they did 6 months, a year and a half before. Again, this is 2005, 2006, 2007. So it's basically it's a kind of a statistical probability of more homes selling for more money, more homes selling for about the same amount of money, kind of in a flat market, or more homes selling for what seems to be less money than they did in recent history. So we're kind of in that same market. We still have a good seller's market. Hear me when I say just because you have missed the boat, if you are a seller, for the best market in modern day history to sell your home, it's still a good seller's market, which means homes are still selling reasonably quickly. We still have one or multiple offers on a lot of our listings that come on the market, but the tone and tenor of the transaction is a little bit different. And a lot of that, frankly, is fueled by a little bit of market uncertainty. When you have the national media outlets and even local media outlets talking about recession, talking about is the housing market about to decline, some of those type of things, it starts to erode buyer confidence. And then suddenly you've got, your stock market portfolio has been taking a huge hit and hasn't fully recovered. So you don't have as much down payment, and then interest rates continue to go up and up, and you're feeling that pinch on buyer power. Buyers are getting hit on all sides. Their cash reserves or down payment has been hit. Their affordability for interest rates have been hit. Their stock market has been hit. For the down payment's been hit. So all of that's creating a cycle, and then their confidence about is the market going to continue to appreciate, that's been hit with all the talk of recession. And so even though 4 of the last 6 recessions has not translated to lower home prices have actually gone up in the last 4 of the last 6 recessions. Still, it's this the undermining of consumer confidence suddenly starts to have buyers being a little bit more cautious, a little bit more hesitant, a little bit more picky and choosy. So we're seeing less contingency-free offers, less buyers coming to the table and saying, hey, sellers, write your own ticket. We'll give you whatever you want. That's the market we had, in the last 6 months to 2 years. Now we're seeing a little bit more of a balanced market. It's still in the favor of the sellers, But the sellers that are being successful right now in today's market, they're adjusting their expectations. If you are thinking about selling your home and you are hoping to operate in the market we had 6 months ago, please just realize the market has changed and you just need to change your strategy a little bit. You got to be a little less aggressive in your asking price. You got to create a little bit of urgency in how you're pricing your homes. You might need to do a little bit more spruce up work, or you might be trying to get your your home on the market quickly, and you're going to make that adjustment in the price. We're happy to kind of consult with you and give you recommendations on a case-by-case basis. But the long and the short of it is the market is different. And if you don't change your mindset and shift with the market, you're going to be very disappointed with your potential sales outcome. So are home prices going up or down? We don't know, but we are seeing more and more examples of properties where we're saying, wait a sec, that seems like if it came on the market 6 months ago, it might have actually sold for more. Maybe they would have had 6 offers versus 3 offers. Maybe the extra 3 offers would have translated to an extra 5, 6, 7% in the final sales price going above the asking price. So it's impossible to tell with absolute certainty what home prices are doing, but we do know that the market is still fairly strong. We also know that one of the determining factors in home sales prices is the absorption rate. The absorption rate is how many weeks or how many months of inventory, how long would it take for all of those homes that are on the market to sell at the rate that homes are selling if no new homes came on the market. So that's actually gone up in the last month by about 7%. So we now have 1 1/3 months of inventory. That is still a very small absorption rate, very low absorption rate, but it is notable that that is ticking up slightly. Now, we are also seeing more price reductions in this current market than we've seen in many, many months. So we're seeing that up in the last 4 months, maybe on average about 30% more price reductions. But more price reductions does not mean home prices necessarily are softening. Again, that is a much harder determination. It just means that sellers are adjusting their expectations correctly and rightly to meet whatever the current buyer's expectations are about what the market is right now. So also what's kind of interesting is even if you look at the median and average home price, you're seeing an increase on both of those year over year, which meaning last July, last June, the average price and median home price both were lower. But what could have happened, again, we don't know, but what could have happened is we could have seen the same rapid rate of appreciation that we've been seeing the last couple of years, astronomical, about 2% per month. And that could have been happening at the end of last year and the beginning of this year. Then you have recession hitting, starting to hit. You've got interest rates going up and buyer power going down, consumer confidence going down, and suddenly the market starts to change. And so it could have been as we had a push up of appreciation. And then we conceivably could have had home price softening, and that's averaging out to still double-digit appreciation on paper year over year, but not nearly what we've seen the last couple of years. So again, we don't know for certain, but that's how we look at it from a very high level digging in, and we'll keep you updated week by week, month over month, what's going on in the market. And it's really important to have a true advisor in your corner giving you these statistics, not pushing what's in their best interest, but what's in your best interest and helping you put a strategic plan in place, whether you want to capitalize on the opportunity, and there are opportunities in today's market as a buyer, or you want to sell your home and capitalize on today's opportunities. As a seller, there is opportunities to still sell in what is a good seller's market. So as far as home sales go, we're seeing drastically lower levels this year compared to last year, but it's on par to 2018 and 2019. So the sky's not falling. It's just compared to the rapid pace of last year's market and the drastic number of home sales last year, we have seen a reduction there. We're seeing a lower number of offers in the market. We have seen a lower, so we're just seeing, okay, rather than maybe 6 offers on the property, we might have 2 or 3. But in some cases, again, when our sellers are listening to our pricing recommendations and pricing their home strategically with some urgency, we're still seeing those 6, 7, 8, 9 offer situations and giving our sellers back that leverage. A lot of it depends on who you hire, what their marketing strategy is, and what your pricing strategy is. Keep that in mind if you are considering being a seller. The most active price ranges in the market right now, $1.3 to $1.7 million. That entry-level buyer is very active. The $2 million to $2.7 million price range, those are a lot of step-up buyers here in this area, or second or third home buyers, a lot of kind of tech buyers in that price category. And then over $10 million is still seeing some good activity. We saw 13 sales above $10 million, one of the which is the highest price category as far as number of sales, and that was in last month in June. Highest sales price was $18.10 Buena Vista Drive, selling for an even $17 million. If you want to know what's happening in the luxury market. As far as the home sale velocity or speed to sell a property, again, it comes with an adjustment of expectations. It's taking about twice as long to sell a home. So just keep in mind the dynamics are changing a little bit. Depending on who you hire and how you price the home, you may get a bunch of offers at an offer review deadline. Things might soften a little bit and you're doing more one-on-one or one-on-two negotiations with buyers with one or two offers at a time, and maybe even a few weeks after coming on the market. Now, if you're a buyer, keep in mind some buyers are interested in a home, but their confidence has been eroded in this current market with what's going on in the national media. And so they might like a home, but they're like, hey, let's wait a few weeks. Let's see if we can get a better deal. Be aware, buyers, a lot of those properties are still selling, and we have some disheartened buyers that waited too long, focusing on getting that little better deal, and they're missing out on some ideal properties. So we're still counseling our buyers. If you like a property, don't wait. Have a conversation with the seller. If it's a one-on-one conversation, negotiate and put something good together. If the seller has more leverage and there's multiple offers, you still got to be aggressive, even though the market has changed. Inventory levels. So inventory levels are actually the lowest in history here in town, but they may be picking up soon at the slower velocity of a slower speed or velocity in the market. So we'll see what happens there. But to put it in context, we've got 23% fewer homes available right now compared to last year at this time, year to date. Interest rates, talked about interest rates. Interest rates continue to rise and are predicted to continue to rise through the end of the year. They're in the higher fives now, generally speaking, and they're predicted to be in the sixes or sevens by the end of the year. So if you are a buyer, there's this tension of, hey, what's the market going to do? Can I get a better price? Well, that tension is eroded by your buying power being eroded if those interest rates go up. A 1% increase in interest rates is pretty much a 10% increase in your mortgage payment. So there's a lot of buyers that say, hey, even though the market may be in flux, we don't know what's going to do, we still want the certainty of a better interest rate now. Also keep in mind, you might hear this term, marry the property, date the rate. Very important right now. Go out and if you still want to buy that property, buy it now. Get the best rate you can here, but give your lender a standing order that you'll do a no cost, no fee refinance in the coming months or years if interest rates drop back down, or I would say when interest rates drop back down. And then you'll be able to improve that rate over time. I know for my personal residence, I think I've refinanced it 4 times since I bought it in 2013, each time improving my rate at a no cost or no fee, just time and hassle. And I'm so glad that I did. Recessions, like I mentioned, 4 out of the last 6 recessions saw home prices increase, not decrease. So just be aware of that. We don't know what's going to happen here. We do have a kind of a unique situation where we have governmental control so aggressively trying to slam on the brakes to hedge that inflation. That's a big one, right? So when you have so much force trying to slow the real estate market down, will that drop home prices, or will those supply demand economic forces keep kind of pushing that up? We'll see what happens and kind of tune in to see. So right now, the big questions that we are following are what's happening with inflation, what's happening with rising interest rates, inventory levels and absorption rate. How is that affecting home prices, as that's really tends to be the definitive factor in home prices decrease. And then also still looking to kind of the political, economic, international kind of unrest. So those are the 4 things that we're watching closely as we go into this shifting market. Again, it's always shifting one way or the other. We're not afraid of that. There's opportunity in every market. And if you are thinking about wanting to take advantage of the opportunity, either as a seller or as a buyer, reach out to your agent or your preferred Zia Group Realtor partner if you want working with an agent. We would love to give you a complimentary consultation because there is absolutely opportunities in this market. There's going to be opportunities tomorrow in that market. There's going to be opportunities a year from now. There's always opportunities. And the key is having someone in your corner that's helping you see those opportunities and adjust accordingly to build or protect your financial wealth. So thank you for tuning in. Again, this is Daniel Zia with Zia Group. We'd love to help you if there's anything else we can do actively. Until then, we'll see you in a month.